Assalamualaikum warahmatullahi wabarakatuh to our lecturer, Madam Emeralda. So for today, we are going to present a financial analysis of two prominent companies in Malaysia's semiconductor sector, which are INARI AMERTRON Berhad and Malaysian Pacific Industries Berhad, which known as MPI. So we selected these two companies specifically because they both operate in the same core segment of the industry, known as outsourced semiconductor assembly or testing or OSAT. So this share focus provides a perfect foundation for a direct meaningful comparison of their financial health and strategies, allowing us to see how different companies manage a similar market opportunities and challenges. So before we start, this is our group members. We have Khalif, Afiq Hafizi, Azim, Muaz, myself, Ani Idaham, and Muhammad Farhan. So before we are going further, I will introduce a summary or a little background of both companies. Let's start with INARI AMERTRON Berhad. INARI AMERTRON Berhad is a relatively young and dynamic technology company established in 2006. It has grown rapidly from its focus on radio frequency components to become a diversified global player in advanced semiconductor packaging and testing, reflecting the innovative and agile side of the industry. So in contrast, Malaysian Pacific Industries Berhad (MPI) is a seasoned pioneer with a legacy dating back in 1962. As one of the longest-standing publicly listed firm in the sector, MPI represents a stability and experience operating as an investment holding company with a substantial history in providing semiconductor manufacturing service worldwide. So by examining these two companies together, one is a fast-growing specialist and the other one is established industries veteran.
For liquidity ratio, the current ratio, INARI AMERTRON Berhad, for every RM1 of current liability, the company has RM9.31 of current asset to repay the current liability. But for Malaysian Pacific Industries Berhad, for every RM1 of current liability, the company has RM4.17 of current assets to repay the current liability. In comparison, INARI AMERTRON performs better than Malaysian Pacific Industries in terms of current ratio. This shows that INARI AMERTRON has safer short-term safety as compared to Malaysian Pacific Industry. For quick ratio, INARI AMERTRON Berhad, for every RM1 of current liability, the company has RM8.65 of its liquid asset to repay the current liability. But for Malaysian Pacific Industries Berhad, for every RM1 of current liability, the company has RM3.74 of its liquid asset to repay the current liability. In comparison, INARI AMERTRON performs better than Malaysian Pacific Industries in terms of quick ratio. This shows that INARI AMERTRON has greater immediate ability to pay their creditors as compared to Malaysian Pacific Industries. For profitability ratio, the gross profit margin, INARI AMERTRON Berhad, for every RM1 of sales, the company is able to generate 22 cents gross profit. But for Malaysian Pacific Industries, for every RM1 of sales, the company is able to generate 11 cents gross profit margin. So in comparison, INARI AMERTRON performs better than Malaysian Pacific Industries in terms of gross profit margin. This shows that INARI AMERTRON has generated more gross profit per sales as compared to Malaysian Pacific Industries.
Let me continue with profitability ratios. Net profit margin. INARI AMERTRON performs better than Malaysian Pacific Industries in terms of net profit margin. This shows that INARI AMERTRON has generated more net profit per sales, with 15 cents per net profit per sales, compared to Malaysian Pacific with 9 cents only of net profit per sales. Return on capital employed (ROCE). Malaysian Pacific Industries performs better than INARI AMERTRON in terms of return on capital employed, with only 1 cent difference. INARI AMERTRON 7 cents and Malaysian Pacific 8 cents. This shows that Malaysian Pacific Industry is more efficient in using its long-term funds to generate profit as compared to INARI AMERTRON. Return on asset (ROA). Malaysian Pacific Industry perform better than INARI AMERTRON in terms of ROA, with only 1 cent difference. INARI AMERTRON 6 cents for every RM1 of assets, and Malaysian Pacific Industry 7 cents for every RM1 of assets. This shows that Malaysian Pacific Industry is using its asset more effectively to produce net profit as compared to INARI AMERTRON.
Efficiency ratio. First, inventory turnover. It's two companies, INARI AMERTRON Berhad and Malaysia Pacific Berhad. First, INARI AMERTRON Berhad, with accounting period, the company has replaced its average inventory 6 times. Meanwhile, Malaysia Pacific Industry Berhad is average inventory 12 times. It's a comparison. Malaysia Industry perform better and compare INARI company. It's Malaysia Pacific has quicker sale. Efficiency ratio. Average collection period. INARI AMERTRON Berhad, the company is able to collect debt with 52 days of the accounting period. Meanwhile, Malaysia Pacific Industry Berhad has collected debt with 54 days. In comparison, INARI AMERTRON perform better than Malaysia Pacific Industry. It shows that INARI has a faster money collection toward the account receivable and better cash flow than the Malaysia Pacific Industry Berhad. Efficiency ratio. Third, total asset turnover. INARI AMERTRON Berhad This means that for every RM1 of the total asset, the company generates 40 cents of sale. Meanwhile, Malaysia Pacific Industry Berhad, every RM1 of asset, company can generate 31 cent of sale. Is the comparison that Malaysia Pacific Industry Berhad better performance compared to INARI, ensure that making more effective use resources increase in the sale.
Next is leverage ratio. For debt ratio, for INARI AMERTRON Berhad, this indicates that 9% of the company assets are finance liabilities. When we compare with Malaysian Pacific Industry Berhad, this indicates that 80% of the company's assets are finance liabilities. For the comparison, INARI AMERTRON perform better than Malaysian Pacific Industry in the term of the debt ratio. Why? Because INARI AMERTRON is more financially solid and is financed mostly by its own resources, hence making it less financially risky as compared to Malaysian Pacific Industry. The next one is debt to equity ratio. For every RM1 of the equity, the INARI AMERTRON Berhad use 0.1 ringgit of debt. For Malaysian Pacific Industry Berhad, for every RM1 of the equity, the company use 0.21 ringgit of debt. For the comparison, INARI AMERTRON Berhad perform better than Malaysian Pacific Industry in the term of debt to equity ratio. It shows that INARI AMERTRON has a lower degree of the risk assumed by the shareholder and a more balanced company financing structure as compared to Malaysian Pacific Industry. Lastly is time interest earned. For INARI AMERTRON Berhad, the company cover its interest expenses 114.68 times. And for Malaysian Pacific Industry Berhad, the company can cover its interest expense 79.38 times. For comparison, INARI AMERTRON perform better than Malaysian Pacific Industry in the term of net interest earned. This show that INARI AMERTRON has a greater business ability to pay off their debt by using their earning as compared to Malaysian Pacific Industry.
Next is overall financial analysis. For the current ratio, P ratio, gross profit margin, net profit margin, average collection period, debt ratio, debt to equity ratio, times interest earned, INARI AMERTRON Berhad performs better compared to Malaysian Pacific Industries Berhad. For the return on capital employed, return on assets, inventory turnover, total asset turnover, Malaysian Pacific Industries Berhad performs better compared to INARI AMERTRON Berhad. In conclusion, this financial ratio analysis shows that INARI AMERTRON Berhad performs better overall than Malaysian Pacific Industries Berhad. INARI has stronger liquidity, meaning it can easily meet its short-term obligations. INARI also shows higher profitability, indicating better cost control and profit generation. Lower debt and leverage ratios suggest INARI faces less financial risk and has a more stable long-term position. Although Malaysian Pacific Industries Berhad performs well in efficiency ratios, its higher use of debt increases financial risk. From an investor's perspective, INARI AMERTRON Berhad is a more attractive and stable investment option. That's all from us. Thank you.